do you suck at trading? Be honest. Are you jumping ship to that next system? You've given up on one system, now you're on to the next one. Do you take your profits early, constantly? Do you move your stop loss away from you? You know, do you have that mental battle of fear and greed when you're in the market and price action isn't in your favor and you want to take the profits off the table, and then when it goes against you, you move your stop, you think you know what the market's going to do and you don't? You definitely want to watch this video. We're looking at this level here, the double bottom. We had our double bottom here, followed by another double bottom. Previous structure support should become resistance. We broke and closed below that level. As we did that, we had this descending channel as well. We know these levels provide decent levels of resistance if they're tested again. Okay, good levels of structure. Whenever you can find these consolidation patterns, these channels or wedges or pennants or flags, if they're tested again, once they're broken, it provides the good support or resistance depending on the whatever way the market's going. And this is what I was looking at Warren. We broke and closed below. We was looking for a pullback up into this level before we took a short. Okay, you can see we had an equal measure move here as well. Up at this level, we've also got a Fib Inversion trade setting up a bit higher, but the first opportunity for me is in that dollar flat level. We've got that even handled number, dollar flat, and if we bring on our triangle tool, sorry, we've actually got a Gartley pattern here, X to A to B, B to C, and a CD completion. It actually completes at the dollar flat. So my orders, I'm going to get my orders on this now. Okay, I'm going to get my orders just 2 pips. I'm going to front run for 2 pips below that dollar flat level. Okay.
Order pending.
So there's my sell limit. I'm going to work out where my stop loss needs to go.
Order pending.
Okay, and there we have it. So there's about 30 pips of risk, and we are going to be shooting for a retest of the lows. So this is the sort of risk reward I'm looking for on this trade. All right, so we'll just have to wait and see if we get filled. There may be another opportunity to enter here. It just depends. I'll leave this old order on for now, and we'll see how we go. Any questions on this before we drop down to the day trading time frames? All right, welcome to the war room meeting. We've got I've got one trade on at the moment. Got stopped out on the pound dollar, and it's been a bit of a terrible week really for me. But this was a trade that we were looking at yesterday and looking for a potential opportunity to short this market. And you can see that I got short here up at 99.98, just below that dollar flat level. And we got some news out at the moment, but entered this trade, and I'll go through what we're looking at and how I entered this trade in just a sec. I'm going to show you guys a little trick that I learned through backtesting, and how I was able to capitalize on taking pattern entries into longer term trend continuation trades. But before I do that, I just want to, yesterday when I showed some backtesting results from one of the clients at Trade Empowered, I did get a couple of messages about, that's so much information, it seems like so much effort, and I didn't realize that you had to backtest. And that's the same position that I was in when I heard about backtesting. Before I started backtesting, and I had that turning point in my own trading, I didn't even know what backtesting was. I didn't know you had to do it. I didn't know how important it was. And this is the thing with new traders. It's very common for these are the two main problems. The two main problems why traders give up so early on is because they overestimate what is achievable in a short space of time. So the first thing they do is overestimate what they think they can achieve in the first year. Okay, because that's that unconscious incompetence stage. You come in, they completely overestimate. They think they can double their account within a couple of months and double it again in 6 months and double it again in a year, and that's just not the case. So they completely overestimate what's achievable in the first year. And then the next problem is, because of that, because they're brought down to earth and they're taught that, you've really got to put some work in here. You've got to do some testing. You've got to build a plan. You've got to understand how to read price. You've got to test, verify your trade plan. And because of that, what happens is they underestimate what's achievable in the next 10 years. They underestimate. So for those two reasons, they're discouraged. They want to search for something else, something that must be easier, next shiny object, and they move on. And I want to tell you that what you can achieve in 10 years, once you've got it down and you've put the effort in that first year, what you can achieve in 10 years is far greater than your expectations, I can assure you. But the thing is, you've got to be prepared to put the work in the first instance. And that is, unfortunately, build a plan, learn how to read price, right? Get a backtesting spreadsheet, put all your results in the spreadsheet, crunch the numbers, and go through the process properly. Test it, verify it, repeat it, demo trade it, and then apply capital once you've proven to yourself that you're able to generate consistent profits over time. So just tying on from yesterday, got a couple of messages on that. And what I'm going to show you now is, obviously we was looking at this yesterday. I want to share with you something I shared with some live members this morning. And it comes down to reading price and a trend continuation. Okay, so we're looking at a trend continuation situation where we've identified a trend in the market. We're seeing lower low, lower close. We're seeing pullbacks, okay? And say, for instance, we've got major structure on the higher time frame looking left, and we're going through the identify, predict, decide, execute phase. And that's what we do every time we approach the markets. It's what we teach on the Ultimate Trader Transformation course. And essentially, it's how to read price, okay? We're going through IPDE, identify, predict, decide, execute. We're looking at the higher time frame, and we're identifying the previous levels of major structure support if we're in a bearish trend, and we're predicting, we know these structure levels are like magnets, so we're predicting that price action is likely to test that level next, okay? So we're predicting, we've identified a bearish trend, we're predicting that it's likely to test the major level of structure support next. How it's likely to get there? Well, we know price either pushes down or we get a pullback, and then we see a move to the downside. So it can move two ways. And that brings us on to the D part, which is decide, and that's decide how you can get involved. Well, if you're a straight trend continuation trader, you're essentially looking for a pullback up into the kill zone, and then you're looking to short the market in an area that's going to give you a 1-to-1 or more, if that's what you look for, and a 1-to-1 risk reward or more. And then you're looking for an entry technique. Okay, so whether you're aggressive and you just enter at market, or maybe you trade off of Fib ratios, or you wait for a little double top or a bit more of a conservative entry up in this zone. And you guys know that I look for a lower low, lower close candle if we're looking for a bearish trend. RSI, go overbought, lower low, lower close candle. And there's traders that are more aggressive than me, and there's traders that are more conservative than me. But what I found is once I learned how to trade advanced patterns, and I did all my testing on advanced patterns on BATs and Gartleys, what I found is when I correlated those to a trend, when I ran through all of my back testing, I found that whenever we had a pattern formation form, so we were looking at, let's just say for instance, this is let's just say, for instance, we had a pattern forming here. As long as we don't test the low, in which case my move would have already been made. As long as we don't test the low, I'm looking for a trend continuation move. So we've got this complex pullback now, which is in the form of a pattern, a bat pattern, right? I can take this trade aggressively. I can use this as my entry technique and switch up my target. So instead of taking conventional targets on the bat pattern, which we teach in the Ultimate Trader Transformation course or the Advanced Pattern Trader course, I switch my targets up as if I was in a trend continuation trade. So I then take some profits off at a retest of the low or the A leg of the pattern, which is here. Okay, and then I trail my stops down to that next major level of support. So I have a buy limit order set at the major level of support, and I trail my stops down. So what happens is one of two things. I either get stopped out at a profit, or price action just rolls down and takes out my buy limit order at that level. And it's great being able to do this, but it all boils down to understanding how to read price action. If you cannot identify a trend, you know, if you're doing this sort of thing when there's a potential rotation or we've violated a previous outside return and you don't understand how to read that, or there isn't actually a confirmed trend, right, you're going to have a real hard time capitalizing on this sort of trade style. All right, but the beauty is once you do learn it, then you can build out your plan and build out your you know, crunch your numbers in your back testing, make sure that it doesn't, you know, one isn't detrimental to the other, and really capitalize on these kind of setups. And that's personally what I do. And you guys in the live room, you've seen me capitalize on these many times, particularly on the Aussie dollar and the pound yen. So going back to our trade yesterday, what we were looking at is we were looking at a lower close. I was already looking at this level right here. We had our double bottom, followed by another double bottom when it was tested again. We broke straight through it, pulled back up into structure. We also had our little descending wedge pattern here as well. We've got a dollar flat even handle number there. We all know these numbers are psychological numbers, especially $1 flat. Okay, if you draw a horizontal line on this, you're going to go out to the higher time frames. You'll find that this level is respected in this market. Even though this particular market is what I call a consolidation pair, it seems to consolidate more often than many of my other pairs in my portfolio. But this level is still respected. So as we push up to this level, if you're a bit more conservative, you might be building out a case for entry around this level. And there's a few things you can do. First of all, you've got this wedge, this channel here. We know through discretion that these usually, when they break to the downside and they're retested, they provide a decent level of structure. Okay, so in this case, resistance. Also, what you might find is if you're trying to build up that confluence in that zone, you could bring on an equal measured move. You can see we've got an equal measured move in that zone as well. Okay, and we're really trying to think like as many of the other traders as possible. What are other traders looking at? And you're going to see that we've got an equal measured move up here. We can bring on some Fib extension. See, we've got a 127 right up in that zone as well. Let's just remove some of these so it doesn't get overcrowded. Okay. So you've got 127 extension. We can even bring on a Fib retracement from this swing high to swing low. And you see we've got a 50% retracement in there as well. So we've got a little Fib cluster, some Fib confluence in that zone as well. And lastly, this isn't going to line up, but there is what we know as a Fib inversion. It's a little bit higher up there. What I'm going to do is I'm going to leave on these two here, but you can see we've got a 1414 lining up in that zone as well. So we've got a really tight Fibonacci cluster there. We've got a Fib inversion potentially setting up at the 1618, but really I'm looking at this zone here. Okay, so that's your conservative approach. Okay, if you want further confirmation. But what I was looking at myself is right at that dollar flat level, we had X to A to B, B to C, and a CD completion as well. So we've got, so if you're familiar with a CTS style of trading, this has a very high CTS score. Okay, it's got psychological number, even handle number, Fibonacci confluence, higher time frame structure. We've got minor structure as well. We've also got a pattern entry, an ABCD equal measured move. Right, so this is a very high probability trading opportunity, but the beauty is, instead of, there's many ways to enter this, but instead of entering the pattern and taking conventional targets, I'm looking for a retest of these lows. So you can see my my order down here, in fact that's got the incorrect order on there, but my order is going to be down here at 99.33, okay, for my target ones. And then target twos, I'll just trail the stops down. Obviously, the syndicate, we only take one target. But for target twos, I'm going to be trailing that down to that next level of structure. And I think it's down at 9,900. But that's what I'm looking at, guys. So I thought I'd share with you a little tip and trick that I learned when combining my, my knowledge on how to read a price chart and my trend continuation trading style, and combining that with pattern trades. Still in this on the Aussie CAD. It's not pain-free, you know, we've been moving sideways. I came in this morning, and when I came in this morning, we were at sort of break even. So, you know, it's a case of sticking to your plan again, guys, right? We know eventually, more often than not, it rolls over and hits our targets, and it's about sticking with that mindset, knowing that you are going to be wrong, but you are going to be right more than you're wrong. Okay, so it's process over outcome, and it's having the discipline to stick with this. Many traders would have taken profits off now. They would have been scared, and this is what goes through the rookie trader's mind. Let's just go through it, right? The rookie trader comes in, and this is what happens. They get filled, okay? They get filled. Price action starts to push down. They get excited, right? Then it pushes straight back up to break even. They feel fear, okay? Then we push back down into the zone, and they start getting excited again, and they think, oh, maybe I should take profits off. And then they get a bit, you know, then greed takes over, and then they see price action push down and then get sucked back up and hold, and now they're thinking about taking profits. And some of them, they'll close the trade here. They'll close the trade here. And those who don't close the trade here are on this emotional roller coaster. They're watching price action push right back up into break even. Now they're scared. They even go into the red for a bit because they can't take their eyes off the trade, so they're seeing every single move. And then we roll over again, and we're around 25 pips in the green, and they take profits definitely because they're like, oh, here's my second chance to actually get some profits out of this trade, so I'm going to take this off. And they take the trade off the table here. Now, every time they do this, they're minimizing their potential profits. And what happens is when it goes against them, they'll end up hitting a bigger loss than they will a win. You don't have to do that too many times to end up blowing your account. Depending on your position size, right? Alright guys, just an update on this Aussie CAD trade. We rolled over in the night. I was unable to capture the actual fill on camera because I was asleep. But come down this morning, woke up, was in this trade for a few days, ended up hitting targets. I got 64 pips out of this trade, which was very nice, and it just reinforces the belief of sticking to the plan. Hopefully you guys can see this video and, you know, all of the bad habits that I mentioned in the last bit, you know, eliminate those habits and stick to your plan. If you trust your plan, you've tested your plan, you've got a 100% belief in it, and you've got the results in black and white for all your back testing, there's no reason, you know, once you place that trade, the hard work's done. The hard work's done, all of that testing's done, all of the number crunching's done, identifying the setup's done, waiting for your entry technique, waiting for your entry rules of engagement into the trade. All that hard work's done. Once you press place order, you know, buy or sell, that's it. You leave the trade and you let it run. And this is the outcome. So Nice trade, happy with this. Let's get on to the next one. Alright, so that's it guys. That's a good demonstration of what it takes and what results can be achieved when you have an understanding of how to read a price chart. You've done all of your testing, you know what you're looking for, the hard work's done, you place a trade, you're in, you stick with a plan, and you get results. And I say it again, if you want to come over, it's $1 for a month, you've got nothing to lose. Syndicate, you can at least join us in the war room meeting every day, see this stuff every day, and then those of you who want to take it a bit more seriously, you can consider one of the live rooms. My own live room, London live room, we trade the London session, 8 AM till 11 AM, between 2 and 3 hours every day, Tuesday to Friday UK time, and Akil hosts the New York live room, which runs 8:30 to 11 or 8 to 11 New York time every day, Tuesday to Friday New York time. So Syndicate, details below, sign up, $1 for the month, you've got nothing to lose. And I get a lot of questions about backtesting, so keep tuned, stay tuned for the next video, which I'm going to do on how to backtest. And in the meantime, make sure you check out my own personal YouTube channel as well. I'm running lots and lots of different Instagram stories, different blogs over there on business, finance, money, and entrepreneurship. So if you're not already subscribed to that, go and subscribe to that. There's going to be a video out tomorrow as well to celebrate Independence Day. So till next time guys, take care and I'll see you then.